And this is Boom Bust, broadcasting around the globe, covering the world of business and finance and the impact on us all. I'm Ben Swan.
And I'm Christy I in Washington. Here's a look at what's on deck today. Incredible numbers as global debt has risen to $250 trillion. And there are two countries responsible for more than half of the increase over the past 10 years. We'll break it down. Plus, tech companies want to be more than just social media and search engines. They want to provide checking accounts, credit cards, and payment services. Are these companies trying to gain too much access? And finally, Disney Plus had its blockbuster launch this week, and an impressive one considering how congested the streaming app space is becoming. RT producer Brent Jabbour will join us to talk about how Disney Plus changes the streaming landscape. We have a packed show today, so let's go and dive right in.
And we begin with what you might call a race to the bottom, as the U.S. and China have led the way to surge in global debt of over $250 trillion. That's trillion with a T dollars. When we talk about numbers that high, it's hard to even fathom. But just in the first part of this year, $7.5 trillion was added to global debt. Again, just the first half of this year. And the U.S. and China responsible for 60% of that. The entire rest of the world, more than 140 other countries, are responsible for only 40%. Well, now this is government and private debt. In fact, according to the Institute of International Finance, over the past decade, global debt has ballooned by more than $70 trillion, which again has been driven by both governments and corporations. So, Christy, let's break this down here, because when we're talking about a global debt that is really equivalent to 320%, again, these numbers are so hard to even fathom. 320% of global gross domestic product. How is that sustainable on any level?
It's not sustainable, and that's why this rising debt level that has absolutely no signs of slowing down has been flagged by economists as one of the biggest risks for the economy and probably the next breaking point. And right now, as you point out, this is a combination of both government debt, public debt, as well as private debt. And the private debt is even more concerning, even though government debt gets the most attention. Private non-financial debt in the U.S. is at $27 trillion versus public debt is at $19 trillion. And the reason why private debt is so much more dangerous is because it's more problematic, is because public debt has more impact on the economic landscape.
Sure.
Right now, if you look at the past, the roaring 20s, the Japanese boom of the 80s, and most recently the US in the early 2000s, what did all three of those have in common?
What's that?
Huge levels of private debt. Low, relatively low public debt, but huge, unsustainable levels of private debt that kind of just funded the incredible binge and rise. Yeah,
there was also been a stunning amount, not just of this borrowing taking place, right? Because it's really borrowing money that doesn't exist. But as part of this, central banks have been holding interest rates at abnormally low rates, right? This is nuts. It only encourages and increases this behavior, right?
Absolutely. This is kind of what drove everybody to borrow more, because if debt is cheap, why not take on more debt? And that's actually what's been happening. Corporates have now been issuing junk bonds at record levels.
Right.
Record levels. And they are deeply indebted companies that are actually using debt to pay off equities. So they're kind of just like borrowing money just to prop up your own share values. And that's been working because you've seen the massive equity runs. And as you pointed out, we're at all-time highs right now.
We only have like 15 seconds, but I want to ask you about this real quick. The Federal Reserve just injected another $104 billion into markets overnight. They began on Thursday and ran overnight into Friday. The Federal Reserve is just a huge part of this, right? Continuing to dump cheap money at lowest interest rates, and it's not good for the economy. Last word.
Not only that, but they've also included 28 and 42-day term loan repos into this agenda.
That's right.
And that's the new news for right now. So they've tried to inject money into the system consistently. That has not solved the problem. So now they're extending the term and trying to increase more liquidity. And right now, the most worrisome part of all is that they've made this the new normal. So what's going to happen when they take their hand out of the banking system? Because right now they can't.
I think we all know. You're up.
Amazon is saying not so fast to the Pentagon's $10 billion cloud computing award to Microsoft, claiming that the process was not fair. It was just over 2 weeks ago when the Defense Department announced that it would award the $10 billion cloud computing contract to Microsoft's cloud computing powerhouse, Azure. It was a surprising moment, as analysts thought Amazon would definitely get the contract. Now, Amazon is claiming unmistakable bias. Thursday, AWS CEO Andy Jassy said that Amazon is contesting the award, that the contract was based on politics, saying that the DoD could not objectively award the contract while President Trump was disparaging one of the contestants. Back in August, President Trump said that Amazon's bid for the JEDI contract was under review by his administration because of complaints from other companies. It is true that the president, however, has criticized heavily Amazon owner Jeff Bezos. The company released a statement saying, numerous aspects of the JEDI evaluation process contained clear deficiency errors and unmistakable bias, and it's important that these matters be examined and rectified. Giant tech companies are now getting into the finance industry. Concerns lingering over the lack of regulation for these social media platforms continue, and some even wonder if personal information, including political beliefs or even gender, will impact someone's finances. RT correspondent Natasha Sweet takes a look at what the new trends are in the works for these companies.
Google announces it'll begin offering checking accounts next year. PayPal's Venmo will be launching a credit card in 2020, while Facebook is launching a new payment system after companies bailed on their Libra project. But with ventures like the Apple Card already facing harsh scrutiny, it'll be interesting to see where the market goes. While some tech giants have already entered into the finance industry, Google is making the boldest move yet, set to offer checking accounts to consumers next year. Called Cash, the project will be financed through Citigroup and the Stanford Federal Credit Union. But concerns are circulating as Silicon Valley leaders like Apple and Facebook have already encountered issues in the banking world. This as consumers worry about just how much personal information these social media platforms are collecting and exactly how secure their information remains. But a Google executive said in a media interview they do not intend to sell consumers' data. Cesar Sengupa says if we can help more people do more stuff in a digital way online, it's good for the internet and good for us. But not everyone is jumping on board. Former governor and current Democratic Senator of Virginia, Mark Warner, says, I'm concerned when we got, whether it's Libra or the Google proposal, these giant tech platforms entering into new fields before there are some regulatory rules of the road. Because once they get in, the ability to extract them out is going to be virtually impossible. As new ventures begin, some like the Apple Card are already off to a rough start. Tech entrepreneur David Heimer Hansen tweeted, the Apple Card is such a sexist program. My wife and I file joint tax returns, live in a community property state, and have been married for a long time. Yet Apple's black box algorithm thinks I deserve 20 times the credit limit she does. Steve Wozniak, co-founder of Apple, responded to the tweet saying, quote, I'm a current Apple employee and founder of the company. And the same thing happened to us 10 times, despite not having any separate assets or accounts. Some say the blame is on Goldman Sachs, but the way Apple is attached, they should share responsibility. Venmo will be launching its first credit card with Synchrony Bank next year. The idea is looking to help Venmo generate more revenue. The mobile payment service used as an app is an arm of PayPal said to be unprofitable. Synchrony Bank already finances eBay and Amazon.
I actually don't know if Libra is going to work. But I believe that it's important to try new things, and as long as you're doing so responsibly. That's what has made America successful, and it's why our tech industry has led the world.
Not everyone was convinced that Facebook's idea of a global payment system known as Libra was a good idea. But Mark Zuckerberg isn't letting regulatory concerns get in the way of Facebook jumping into the finance industry. The tech giant is launching Facebook Pay this week. The initial use of the payment system will be used to send money to friends, shop for goods, and donate to fundraisers. Over time, Facebook plans to incorporate Facebook Pay into Instagram and WhatsApp. Well, the notion of big tech jumping into the finance industry could offer many potential benefits, such as promoting associated gains in economic activity. There are also some major risks involved. In addition to consumer protection, some analysts point to big tech companies utilizing data from their existing platforms. Some say this could spark rapid change in the financial system, ultimately reducing competition. In Los Angeles, Natasha Sweet, RT.
A lot of red arrows on the board today as worldwide growth remains elusive despite continuous attempts by the central banks to intervene. Let's see how we ended up. To start, the MOEX ended the week down as GDP growth for the third quarter came at 1.7%, below the Ministry of Economic Development's early estimate of 1.9%. Growth was mainly supported by agriculture and mining, and there is concern that economic growth over the next few years will be impossible without new capital investment. Over in Shanghai, the composite fell on Friday to end the week lower, with the country's blue chip index posting the biggest weekly decline in more than 3 months, amid uncertainty around the China-U.S. trade deal. Interesting how uncertain China is about a deal materializing and how certain the U.S. seems to be when both sides have to agree and sign. Investors are now looking for more clues on Beijing's policy support in the midst of a slowing economy. The composite shed over 2%, making it the worst week since September 27th. Over in Hong Kong, the markets continue to fall as riots and chaos engulf the city. The violence has now escalated to a new cadence as this week a man was doused with an accelerant and set on fire for trying to talk and reason with the rioters. Short selling is back in fashion, with the futures open interest rising to a 7-month high to over 144,000. And the notorious hedgy Kyle Bass is back, hammering away at the HKD peg. Over in Japan, the Nikkei fell less than 1% as high beta shares, those that are the most sensitive to economic cycles, slumped on trade uncertainty and the sluggish business environment. Japan, the world's third largest economy after the U.S. and China, expanded 0.2% in the third quarter, weaker than expectations. A large part was due to lower exports and the effects of a weaker Chinese economy. Over in India, the Sensex was also down for the week following the downbeat in Asia. On Monday, India's industrial production shrank for the second consecutive month in September to 4.3%, making it the worst performance since 2012. The contraction was mainly due to poor performance in the manufacturing sector as cyclicals still remained weak. Down in Australia, the ASX eked out some gains as tech maintained their winning streak for the 7th consecutive session. Gold and mining also rose as investors sought the safe haven of precious metals amid uncertainty over the Phase 1 deal. And finally, the all shares were down after ratings agency Moody's slashed South Africa's economic growth outlook for 2020 to 1% and reduced its outlook from stable to negative due to the unsustainable government debt. Now over to Ben Swan for the rest of Americas and Europe.
All right, Christy, thanks for that. Let's go over to Europe right now. The CAC is up. The DAX is near even as talk about the U.S.-China trade talks continue to keep European markets pretty much on edge. Germany's DAX rose 0.2%. France's CAC, gained 0.4%. Those shares mostly rose on Friday after U.S. government officials said that they were getting close to an agreement with China to cool tensions over trade. Over in London, the FTSE traded down after the opposition Labour Party, they widened their electoral campaign promise to renationalize big industries. They do have a plan to take over parts of broadband and that provider BT to offer free internet. Shares in BT, the former state phone monopoly, they were down over 2%. Over in Brazil, the Ibovespa is down following 1.78%. Interesting. Some analysts here point to the release of an ex-president of Brazil, Lula, walking free from jail after the Supreme Court defends and explains that convicted people will only be arrested, quote, if they have exhausted their appeal options, end quote. That may have impacted the way that foreign investors are now viewing the country. The BMV, they traded down this week after it got off to a rough start, but they have been making a pretty serious comeback over there in Mexico after the past few days because the Mexican economy is seeing a bounce thanks to news that the U.S. trade agreement with Canada and Mexico could be approved even still this year. In the United States, 3 major indices, they have once again hit an all-time high. The Dow Jones hit a fresh record high on Friday after White House economic advisor Larry Kudlow said that China and the U.S. getting ready to close that trade deal. The 30-stock average traded 150 points higher, or 0.5%. The S&P 500, the NASDAQ, they made new all-time highs, climbing 0.6 and 0.7% respectively. And in Canada, the TSX also traded up this week, up by about 0.31%. Canada's main stock index continued its journey really into record territory with gains in the key energy and materials sectors. It also helped to offset losses in the healthcare sector that includes big names in the cannabis business. And that is your global market wrap for the week.
Time now for a quick break, but hang here because when we return, Facebook discovers a bug in their app which they admit allow iPhone users' cameras to operate without them knowing. Plus, Disney officially launched its streaming application, garnering millions of subscribers in just one day. What could this mean for Netflix, Hulu, and even traditional cable companies? We'll get into that later. And as we go to break, here are the numbers at the close.
So it might be one of the most single important stories ignored by U.S. media. The BRICS alliance and the efforts by 5 nations, Brazil, Russia, India, China, and South Africa, to cut the U.S. dollar out of nation-to-nation trading. Thursday, the BRICS summit wrapped up in Brazil, and some of what those leaders of those 5 nations had to say is pretty telling.
I would suggest to increase the participation of where credit is offered in local currency. I believe that it would reduce costs and risks and would strengthen our currencies.
I suggest we create a program so that in our next summit we can reach the goal of $500 million of commerce intra-BRICS.
We made a commitment that the bank should benefit not only BRICS member countries, but should also be able to extend its horizons to other emerging markets and developing countries like our own countries.
Well, BRICS leaders also discussed creating a digital currency or even a cryptocurrency, which could be used to get around the SWIFT banking system, a U.S.-dominated system for transferring money internationally.
Facebook is under fire yet again, this time for invading its members' privacy. It turns out that the social media giant could have been sneakily using your iPhone's camera while using the Facebook app. At least that's the case if you're using it on an iPhone. RT's Trinity Chavez explains.
iPhone users, beware. It appears that a system bug is allowing Facebook to access users' iPhone cameras while they're using the Facebook app, scrolling through their feed. The news now sparking fierce reaction.
I don't think they should have that. I don't think it's right.
Facebook users took to Twitter, saying that their phone cameras were activated automatically whenever they were using the Facebook app.
That's an invasion of my privacy. I mean, this is social media. We don't do that.
One user, Joshua Maddox, tweeted out this video showing that when he scrolled through his social media feed, the app would actively use the camera. He said, found a Facebook security and privacy issue. When the app is open, it actively uses the camera. I found a bug in the app that lets you see the camera open behind your feed. Note that I had the camera pointed at the carpet. Earlier this month, several other users spotted the bug. One user posted this video and said, "Today, while watching a video on Facebook, I rotated to landscape and could see the Facebook Instagram story UI for a split second. When rotating back to portrait, the story camera UI opened entirely. A little worrying." Facebook confirmed the bug in the latest version of the iOS app. The company said in a statement, "We recently discovered that version 244 of the Facebook iOS app would incorrectly launch in landscape mode. In fixing that issue last week in V246, launched on November 8th, we inadvertently introduced a bug that caused the app to partially navigate to the camera screen adjacent to newsfeed when users tapped on photos." Although the company submitted the fix to Apple, users are still outraged, some even considering closing their Facebook accounts.
Yeah, I might be thinking of closing my account. I don't like my rights being violated.
It makes me want to shut off Facebook. I don't want anybody getting into my private information like that. That's invasive. Absolutely not.
Meantime, until the fix is completely approved, experts are warning users to revoke camera access for the Facebook app until the update is available. Now, this is just the latest scandal that Facebook is battling as it tries to win back the trust of its users after a series of privacy scandals that have occurred in recent years, including eavesdropping on its users through phone microphones in order to better target advertising, although the company has repeatedly denied those allegations. Reporting in New York, Trinity Chavez, RT.
See how those people said they were mad, they're going to get rid of Facebook. Or will they? The world of entertainment has been rocked this week by the launch of the new streaming service Disney Plus in the U.S., Canada, and the Netherlands. Tuesday morning, users flocked to their streaming devices to log in for the first time. You know those Disney people. But what brought them to the House of Mouse's new platform? How big was it? Well, on Wednesday, get this, the company announced they had reached 10 million users in just 24 hours. That is a metric that analysts report took HBO Now 4 years to reach. This has been a huge winner for Disney, with their stock price increasing by 11 points this week. Meanwhile, Star Wars streaming giant Netflix witnessed a drop of as much as 12 points this week. So what does Disney Plus mean for the streaming landscape? And really, more importantly here, what does it hold for the future of the sector? And what does that future look like? Boom Bust producer Brent Jabbour joins us now to talk about this. Brent, obviously you're a fan of Disney Plus, right? You were one of those people.
I'm a fan of media. That's
one of those
me.
people who got into those 10 million. But look, it seems like Disney Plus, other than a couple of little kinks here in the very beginning, they've rolled this out the right way.
Yeah, absolutely. And I mean, look, it's an easy winner. They have generations of support from people. They've been around since the 50s, making great content, actually before then, but making great content. And all of that content, not all of it, but most of that content is available on their service. So it's easy for people to sign up, get in, and they offer these great deals. First off, it's only $6.99 to start if you just want to pay right out of pocket. But if you're a Verizon Unlimited subscriber here in the States or abroad, you can get it for free for a whole year. And let me just say, Ben, you have kids, right?
I do.
So
and they all love Disney stuff.
Yeah, if they're watching their Disney, their Marvel, their cartoons, whatever they might be watching, and then a year rolls by, you get that free deal wears off.
Sure.
You think you're going to have trouble at home if you try to cancel that?
Get rid of it.
I think you might. So I think that's where they're
looking. It's like a drug dealer. The first part's always free, and then after that, they get
and on the glitches thing, I think that really helped them out too. Is it worked pretty well on day one. Yeah, there are some crashes. You kind of have a little bit of an issue. And one of the big ones they had was with The Simpsons, because they acquired that during their 20th Century acquisition, or 20th Century Fox acquisition. Well, those episodes are now all cropped into a widescreen format rather than the normal 4:3 format. And so those fans are a little upset. But mostly went very smoothly, and everybody was able to watch the content they wanted.
Yeah, absolutely.
So now more than 10 million American cable and satellite subscribers have actually left their services since 2012. So what are Disney and the new players in streaming, that includes like Hulu, Netflix, Amazon Prime, what are they doing to cable providers?
Well, they're hurting them. Like you said, they're losing 10, or they've lost 10 million subscribers so far, and that's only going to continue. Now, I don't know that Disney Plus plays that big of a role in all of this because it's very niche, kind of like the old school Netflix was when it started. It has a lot of great content, but if you want live sports or something like that, you're going to have to go elsewhere. There are a couple of things to point out here, and I wanted to make this. I took some notes here. The average cable subscription costs about $107 per month. If you have Amazon Prime Video, HBO Now, Netflix, Hulu, and Disney Plus, you're only going to spend $60 a month.
Wow.
So if you don't care about live entertainment or live news, you can do that for almost half the price. Now, I think there's a big one that we're going to see that's going to actually hurt our cable providers is HBO Max.
Yeah.
They're going to launch in May of 2020, and what they're doing is they're giving a deal where you get it for free if you have HBO Now, which is like HBO Go comes through from your cable subscriber.
That's
if you have a cable subscription, then you get it.
Because you have to log in with it.
But HBO Now, you're buying it directly through HBO. So the theory here is that what they're trying to do is decouple themselves a little bit from that cable provider, because why do they want $3, $4, $5 for each subscription when they can get all 15 from every single one? And I think that could really hurt the cable subscriber.
Yeah, and you know what's really interesting, because Disney obviously has the catalog, right, of content. And before doing this, as you said, they acquired The Simpsons. They took over the Star Wars franchises, the Marvel franchises. I mean, there's so much content that Disney holds, but doesn't that up the game for everybody else in terms of the need to invest? I mean, Netflix was already investing billions. Apple Plus just upped the amount that they're looking for in terms of original content to $6 billion. It's a good time to be a content creator.
Right, absolutely. But of course, there's only so much good content. I mean, well, we thought that before, but now look how much great content there is all over. But I think one of the issues that you're also seeing here is look at those, when we go back to the cable companies, look at them. Comcast, they purchased Universal, they purchased NBC. So they have, now they're going, hey, we might not be able to get subscribers on our systems. However, we can still provide that content. And AT&T, they got involved with Warner and HBO, and so they're doing the same thing. So there is, I mean, this is a boon for the entertainment industry, and I don't think it's slowing down. I mean, obviously you've seen Netflix wane and a little bit because they don't want to spend as much money because sometimes things aren't really winning for them.
Sure. Well, and remember too, NBC Universal is going to have their own streaming, and they've already taken The Office back from Netflix. #1 show on Netflix is The Office, which who would have thunk that?
Yeah.
But,
well, and I mean, and now HBO bought up. They bought up Friends. They bought up South Park from Hulu. So and those are big $500 million deals. I mean, that's a big deal.
Yeah, absolutely. RT producer Brent Jabbour, thanks so much for your time.
Thank you.
Another big step for blockchain technologies, as Walmart Canada, which as the name suggests is Walmart's Canadian branch, has rolled out a blockchain-based network for the freight and tracking payment management. This is one of the very best examples of a non-currency application for blockchain because it allows companies like Walmart to track supply chains and logistics data in real time, aggregating the data between Walmart Canada and its fleet of third-party trucks on a shared ledger. According to John Bayless, the Senior VP of Logistics and Supply Chain at Walmart Canada, he explains the value of blockchain, saying, in part, blockchain is enabling a material advance in our smart transportation network with expedited payments, expensive cost savings, and other benefits among our supply chain. Moreover, this degree of improved efficiency represents a powerful platform for us to continue to reduce our environmental footprint and continue our leadership in the environmental sustainability. And blockchain will soon be used by Walmart Corporation here in the U.S. Recently, the company announced that it would use blockchain tech to track its Indian-sourced shrimp to select locations of Sam's Club stores in the U.S.
Yeah, that's a very big deal. You know, a good friend of mine, Anthony Blanchard, has a company that does this. And when he first told me about it, this is how he described it. Imagine being able to follow either, you know, shrimp or produce and have an unchangeable, unalterable ledger that tells you exactly where it comes from, how fresh it is, and where it gets to. That does not exist in the industry until now with blockchain.
Fascinating.
Yeah.
That's it for this time. You can catch Boom Bust on DirecTV channel 321, Dish Network channel 280, or streaming 24/7 on Pluto TV, the free TV app channel 279.
Or as always, you can hit us up at youtube.com/BoomBustRT. We'll see you next time.
And it's now time for your global stock market walk for the week.
This would actually mark the slowest year-over-year growth.
If wages are flat, even setting aside concerns about equity and human welfare. The most from this trade war that he's chosen to initiate with China. Want more Boom Bust? Of course you do. Then don't forget to subscribe.